You're listening to Biotech Hangout, a live and unedited weekly discussion of all the latest news in our industry with a group of biotech insiders. I'm Chris Garabedian, and my co-hosts today are Brad Loncar, Yaron Werber, and Sam Fazeli. For more information about our hosts and guest speakers, or to listen to the most recent episode, please go to biotechhangout.com. So first, this is probably the busiest Friday news day of the year because a lot of people wait to make sure they've disclosed everything before the week starts. So we're not going to be able to cover everything in detail on this, but I'll just highlight a few things that came out. There were a bunch of mega private deals announced. In fact, four that were amounted to over 800 million. Three of those four were a China play of licensing China assets, which we're going to talk about more as a trend a little later in this session. One of them was the former CEO of Myocardia, Tassos Giannakakis. He started another company called Cardigan, kind of a play on myocardia, doing it again. And Perceptive, not the venture fund I manage, but another one that Doug Giordano and Konstantin Pukalov manage along with Arch and Sequoia Heritage. I'll launch that with 300 million in a new co. There was also an announcement that Lilly and A16Z collaborated on a new fund, which isn't the first time that pharma's come in to support a large amount of investment in an independent fund, but definitely a sign of kind of the way pharma is looking at getting better, play into the venture world. And then I have to say, Endpoints has this thing called peer review, which talks about appointments, new executive changes, additions, and it was the longest list of, movement in executives that I've ever seen. So I encourage people to check that out. And then we also heard about the departure of Patrizia Cavazzoni, who was head of Cedar, that she'll be departing before the new administration takes over. And this is a move that came following Robert Califf's prediction of departures and kind of his, salvo of, what we might expect with the new FDA. And then Bruce Booth also, really just highlighted, I wanted to call out that, he, and I agree with this, it's not about a lack of science or a lack of money, but there's more sorry about that. There's more dry powder to invest in private investments than we have ever had, but they're not spreading it, as he calls, like peanut butter across many investments, but giving hundreds of millions to single proven management teams, as we saw with these morning announcements. So, with that, at the top of this hour, Brad, there's been a lot of reports that come out around this time before JPM. John Norris's HSBC, which was former SVB still puts out their report. Tim Opler had a great kind of kickoff with the Stiefel report that he's been doing for many years. So maybe start us off with kind of what do you see going into JPM in 2025 this year? What are some of the things our audience should know about?
Yeah, all those reports were really great. I would highly recommend trying to get your hands on all of them. And it's too bad that Tim couldn't be with us today. His was excellent as well. And the theme was basically just biotech's underperformance. So over the last 5 years, biotech is down 5%, tech is up almost 200%, and the S&P is up 80%. And just the last 2 years, the S&P has been up basically 25% each year. So the reality of our industry is if you just invested broadly in biotech over the last 2 or 5 years, you left a lot of money on the table as opposed to buying the SPY and just like sleeping at night and never thinking about it. And so the question is, why is that happening? And will it ever change? And I would point out that I think the 5 year number is not like a relevant number because the reality is we were in the COVID bubble. And I always use that word bubble. I don't think enough people do because, a lot of people, sometimes I hear people say, well, when are IPOs ever going to be the same as they were 3 or 4 years ago? Or, when is the sector going to be as strong? And I think it's important to be realistic and look back on that time as an aberration that, arguably, hopefully will have been like a once in a generation thing. And so I would not use that as a baseline for anything. But our underperformance has been significant. And one thing Bruce pointed out in a couple of really good tweets is interest rates have been coming down, like the Federal Reserve has been lowering them, And people have often hypothesized that rates were one of the big things that have held our industry back, because our timelines are so long. But as rates have come down, you've seen that tech outperformance, and it really hasn't. We really haven't benefited from that at all. And so, obviously, going into JPM, everybody is going to be talking ad nauseum about the changes in Washington, and whether RFK is going to get confirmed and what that means, and all of those changes. And then on the venture side, like John Norris's report, I think, Chris, you're really the expert in this, but I think some of the key takeaways from that were that, a lot of VC firms raised mega rounds last year, despite the public markets being so difficult. And uh, in terms of deploying the capital, one thing that John pointed out was that there were a lot of really large Series A's. And so that seemed to have been a trend. And then the other issue that, was covered by both of those things, and you mentioned it earlier, Chris, and I hate to sound like a broken record, but we talk about this every week, is how China is impacting our industry. Tim Opler had an incredible set of slides on this, and the chart that was really like, or the statistic that was really the wow statistic is last year, big pharma in licensing new molecules, one third of them came from China compared to zero 5 years ago. And so, we've talked about this a lot. China biotech literally was not a thing a handful of years ago, and now it's in the news every single day. And from a venture standpoint, Chris mentioned a lot of those deals, like the Verdiva Bio, the obesity news from the UK yesterday. That's a really classic example of what's going on. So, raise a few $100 million in licensed and obesity, like oral GLPs and amylin analogs, and are creating a company out of it. And I would also point out that, like, I believe a related statistic is we've also seen layoffs from US companies over the last week. And I don't think those two things are unrelated. I think that 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 discovery work and smaller biotech companies are in big trouble if this trend continues, and it will have a real impact on jobs and money. Over the last year, the number of upfronts that went to China companies was 6 billion, and again, going back to 5 years ago when that was zero, that 6 billion or maybe even more would have gone to XBI companies, and therefore the XBI's performance would have been better than it would. And so I think this is going to be an issue that is talked about a lot more. I've noticed when people, including myself, like tweet about it lately, um, the engagement on those tweets is off the charts. So it's clear that this is an issue that uh, a lot of people are starting to feel and starting to think about. And my personal opinion is that something is going to happen in Washington. In fact, there was a letter today from Congress people saying that the U.S. biotech sector shouldn't do clinical trials at military hospitals in China. And I think you're going to see a lot more headlines like that over the course of time. And my opinion is that we're going to eventually be where the semiconductor sector is, and it's going to be really hard to partner with China companies like we're seeing in the news every day. But we'll have to see what happens.
Yeah, it seems there's a confluence of factors driving this. One is, going back to circa 2017 when the China investment levels for developing products was, really starting and began in earnest over the next, 3 to 4 years before the market dynamics changed in China and turned into hey, we have all these products, multiple targets that you can go after, and the confluence of the market downturn in the US, where it's all about, do we have good management teams to license in these good assets because the quality work was done, and that continues. And I think there is a little bit of that scarcity value where people want to move quickly on these assets, rather than try to do de novo, drug discovery or products that are in the U.S. But maybe Sam, if you want to extend that highlight, I know we were going to talk about it a little bit later, but on the China deals, any perspectives on that? And you follow the XBI closely. Any other comments on the market dynamics that you're seeing going into JPM?
Yeah, Chris, thank you very much. And I apologize for my voice, folks. I've got quite croaky. Look, Brad and I think, are going to be not locking horns, but being on different sides of this. I'm a citizen of the world, not the United States, not the, of course, I'm a citizen of the UK, but I believe in science. And at the end of the day, if the science is good somewhere, where you can go and access assets, go there. Why not? Now, if politicians get in the way of folks doing deals in China, then so be it. I mean, that is how it's going to be. But China started investing heavily in its basic science. They lead massively on particularly areas that are outside of our area, which is material science. And that's where I think you'll find that engineering, you'll find that they have the biggest share of top 1% papers that are published. You just look back on Nature over the past Nature magazine, past few months, they've had quite a good expose over a series of articles analyzing the trends in publication and funding. If we want to get this sorted, we need to look home and get rid of this anti-science attitude. So let's put that away. We did see just around, we haven't had this call for about 2 or 3 weeks now. We did see a couple of deals, both on DLL3. So ADC deals for DLL3. One of them was Roche with Innovent, I think, and the other one obviously was IDEA with Hengry. Both about the same sort of size, $80 million up front, and then some milestones. And so this, I counted about 10 DLL3 assets on the go now. So obviously Amgen was one of the first. AbbVie tried years ago and it didn't work out with their acquisition of Stemcentrx. But you got four ADCs, four, to my count at least, a very quick count, T cell engagers, and a couple of, and one radioligand therapy from Novartis, and another one which is a CAR T from Legend. So that's a busy space, and yet people are going out there and licensing these assets. So what happens in the DLL3 world in the future, I don't know, but it's certainly happening. And some of it, the latest ones came from China. I think quite a few of the others may have too. Now, back onto XBI. I don't know. I mean, look, we talk about rates. Rates today, or at least the prospects of no more or less rate cuts, is impacting the entire market. So it's not just biotech that's selling off today. We've also got the tech sector that's selling off with the 256,000 jobs report that we saw just came out today, and that exceeded forecasts. And a whole bunch of people are saying, look, this really does support the case for a halt in rate cuts. And there are some folks who are even talking about, including our own interest rate analysts, at 2026 being a year where rates might go up again. And we can't ignore that. It's not about rates or not rates. It's about cost of money and where you can get easier and cheaper return. And when rates are at 5%, 6%, that's a very easy way to just park your money and not put it into risky assets. So that's what we're going to have to, I think, deal with going forward as well.
Yeah, well,
And I
and
think
I
the
and
XBI is going to do that.
yeah, and I wonder, Brad, you can comment on this. So the interest rates have not come down the way everybody was hoping they would. And is the issue happening where the investors are looking at, as they start to move money into higher risk sectors, they're viewing tech as less risky or a better risk reward than biotech? Maybe it's the, large language models, the AI, machine learning, the quantum, where they feel that that's going to be translated more easily, or maybe it's a better narrative for investors to understand versus on biotech innovation, and investing in that is perceived as higher risk to tech. I mean, is that part of this dynamic where we're seeing money flow into tech from, a downtick in interest rates versus biotech? Any thoughts on if there's more discernment between these sectors?
Well, I said this in Tim's report, and like I believe it strongly. We're so focused on our own jobs that I think sometimes we're missing. the important big picture. And the big picture, in my opinion, is that our industry is going through true structural change. Like every politician and the entire general public would prefer that the size of our industry be smaller than it is today, and that the prices that our industry charges be lower than it is today. That's a real headwind, and you're starting to see actual movement on that for the first time ever. So, of course, we had the Inflation Reduction Act. I mean, it's unprecedented, the first time ever that price setting, from at least from the government standpoint, has entered the picture. And if you look at the rock and roll years of the XBI, it was like 2010 to 2015, and I think if we're being honest with ourselves, those were the peak years of like, drug company on January 1st, you always see that list of like drug prices that have been increased. Back then, some companies would raise prices like 15, 20% of, big drugs, every year. So it was just out of control. And also, I think in terms of the IPO market, back then there was a lot of like story stocks, and it was a lot easier to IPO. So I'm a very strong believer. I know this sounds really negative, like our industry. I'm a very strong believer in the future of our industry, but in terms of our society trying to keep a lid on us, that's a really big headwind. And then we have all this uncertainty with what's going on in Washington. I mean, certain things about our industry could be totally rewritten. And as we're talking about this China issue, again, it's a totally new factor, that didn't exist 5 years ago. That we have this world competitor that's apparently doing things faster and cheaper than we're able to do on a discovery side. And so I think it's underappreciated, the structural changes we're going through. And speaking of the tech sector, I do think that, some people want to see the same thing happen to the tech sector. You hear a lot about like breaking up big tech and everything. And so I think if those types of things ever start to happen there, if that gets real movement, then I do think sentiment can swing back to biotech, because that would be they would be going through the same thing that we're going through now. But I and until then, I think that we're living in a different world today than we were 10 years ago. And so I'm not
Yeah.
surprised to see the challenging environment.
Well, and
Hey,
I'll just
Chris.
yeah, I was just going
j-
to add
j-
one other headwind on this is the lack of M&A. I think even going into JPM where we expect to see some deals, that are of significance, and I think that is usually a bolster of people getting a little bit more sanguine and excited about valuations in biotech. So that's been another one, despite FTC overhang kind of going away a little bit with a change in administration. But yeah, Sam, please to add to it.
just a little plug here. We have at Bloomberg Intelligence. We have a fantastic podcast from our tech team called Tech Disruptors. And just the one at the beginning of the year, we have a what's going to happen in 2025. And a conversation with John Chambers, who's the ex Cisco CEO. He's the guy who took the company, of course, and a big team of people behind him, from a $70 million business to a $45 billion business. So we should listen when he speaks. But it's a personal view of his, right? If you listen to that podcast, it's only about 30, 35 minutes long, called Take Disruptors. He talks about what he thinks is going to happen in the next year and then 10 years with regards to AI, tech, machine learning, etc., deep fake, etc. I think it's very easy to dismiss tech in terms of thinking that there is a or possibilities of breakups or pressures on the tech sector in general because of the same reasons, i.e., more expensive money. But we're only at the very beginnings of the impact of AI on anything, even including drug discovery. So I think we should be cognizant of that fact. We should think about the possibility that there's lots of money to be made in that sector, and probably potentially quicker, and not not a blind eye, but be cognizant of it so that we don't forget that our sector competes for money with others.
Yeah, I think be too insular in how we look at we need to understand the broader context of tech and the broader geopolitical dynamics, the broader macro economics. And I agree with Brad that we're going through some structural changes. I also think that the patent cliff issue has been talked about from pharma, that they're going to need to fill that. So that's an issue to watch. And of course the themes of the cardiometabolic and CNS and some of these new therapeutic areas that are getting a lot of attention, and there is a lot of dry powder, as Bruce Booth pointed out. We've got more money to invest in private biotech. So exciting
Wait,
stuff. But let's transition to,
Maybe I know
yeah,
I know
go
we
ahead.
have a big agenda, but I think I'll be remiss if I don't just plug in a couple of things here.
Yeah,
Because
please.
one of the
Yeah.
things we do every year is we look at the beginning of the year, how the sector trades through JP Morgan and then through the Cowen conference, the first two big conferences of the year, as a predictor of what's going to happen with the rest of the year. And usually, believe it or not, history, not so shockingly, does repeat itself. It feels like this year has been a total tough year already. Both the XBI and the IBB, thankfully, are only down 1%. So they're actually pretty much in line with the S&P, the SPY, and the QQQ. That's very important to see what's going to happen next week. If we still finish down next week, history suggests we're going to be down for the year. If we're going to be managing to get back up next week, we're going to be hopefully in a better place. So that's pretty important. Look, I do want to say one other thing with Brad. I hear you a lot, but we've all done this for a long period of time, and we've all been singing how the fundamentals of this industry are going to go down. And in bare years, it feels that way. The To me, the fact that China is actually innovative is not the end of the world, as long as we can license those drugs, launch nucos, and bring that IP, and then own the global commercial market. That US companies or potentially European companies will be the commercial enterprises, because this is where you generate the vast majority of returns. The way Biosecure will end up going down, and it's not over, those companies, the Chinese companies, won't win out. They're not going to come here. So I can live with the fact that we can license their IP. I hear you about pricing. Um, Typically, when access is questioned, the sector is under stress, and it's exactly what we're going through now. But I think the IRA has handled that. I agree. What we've been through, these were the bull frothy years, but that's not normal. I do think the fundamentals of the sector will come back. We just need to deal with the next year or two on interest rates.
Yeah, Yaron, on that point, we're heading into JPM. This is usually a little bit of a signal of how the market responds to the news, to all the activities, and like you said, how's the market going to react? So let's talk a little bit about for you can kick off, and Brad and Sam can weigh in. What's ahead this next week at JPM, and what can we expect? What can our audience expect to happen over the next week in our
Yes, I'll
best
do
guess?
a quick kind of, high yield survey. So here's what sadly I don't think we're expecting at this point. We're not expecting a lot of deals. We're not expecting mega deals. And the IPOs have all been getting pushed out. What we're also seeing is we're back at those markets that sadly many of us have swum through many times, where if you have data, the stock goes down, and it doesn't matter if the data is positive or not positive these days. It's a question how much the stock is going to sell off, or if you have a catalyst. So I think it's going to be a little bit of a muted JPM. Argenix, we think, will pre-announce and beat. Vivguard's doing very well, and they'll give an update this time on their early pipeline. I'm starting with Argenix because that's one of the bellwethers. So I think that one continues to look good. Amgen doesn't really do a lot around the conference, and this year, frankly, what we're hearing is that their biosimilar Eylea is going to do well, so that's going to be probably a tailwind for them. But the big question is Maritide, and we're not going to have a real update now until mid-year at ADA, and even that is not going to be in a position to really clarify some of the concerns. So Amgen's probably going to be, a little bit under pressure in general. People are obviously looking at BioNTech for the VEGF PD-1 updates and Summit. Those are probably going to be from phase 2 later on this year. And those are going to be driving tempo on both of those. We might start getting some of the phase 3 out of Summit in the second line EGFR mutated setting late this year. We'll need to see. Um, I think city.gov talks about data in 2026, but it depends on survival, obviously, in that study. Exelixis, which is expected to get, it was hoped to get acquired. We don't think they'll get acquired. We think Cabo is going to be sort of in line, and their guidance is going to be in line, and then it's going to be up to the early pipeline to sort of perform. So obviously, Exelixis had a huge year last year. We're probably not expecting the same strength, absence of M&A this year. Ascendis is a big one. They'll pre-announce on their growth hormone, the weekly growth hormone Skytrofa. Remember, last year was a tough year for that brand because of competition from Novo and a lot of pricing pressures now that Novo launched, and frankly, even Pfizer. We think Skytrofa is going to be mostly in line, given that they guided down already in Q4. And 2025 is probably going to be sort of okay in terms of where they guide. The big one, obviously, is going to be their launch of Yorvipath. That's their once daily version of the PTH replacement. We think that launch is going to go well, but they literally just launched in the middle of December. Another big one that people are looking at is Ultragenyx. And as many of you know, they're developing a drug called setrusumab, which is a rank ligand antibody. Not dissimilar from Amgen's Evenity. Evenity is approved for osteoporosis. It's the only bone building drug. And recall, if you have osteogenesis imperfecta, you have a congenital, essentially genetic disorder where your body doesn't make bone properly. And based on the phase 2 data with Ultragenyx, they did a very nice job building bone and reducing fractures. And now we're all waiting for that phase 3 data. Ultragenyx is our top pick. What we're all trying to figure out is, would the study work on the first interim analysis, which is expected to take place imminently, probably in January, or is it going to be on the second interim analysis, which we think much more likely to be powered correctly to then stop at that point, and that's going to be around May or June. And if that doesn't hit, that's going to be the most likely one to hit. Then they have to go to the final one, which is around October or so of this year. But Ultragenyx will probably pre-announce after the close today on Crysvita, which is their other called X-linked hypophosphatasia drug. Um, but that's not so important. Everybody cares about setrusumab. We think they're just going to say that they're continuing to be bullish, and it's probably going to stop in the second look. So that's kind of a survey of some of the important companies that we cover.
Yep. Great. Brad, I know you usually plan some video interviews for Biotech TV with the newsmakers of the week. I don't know if you've announced that yet, but what are you looking for and looking forward to over this next week, or any highlights for who you're going to be talking to?
Yeah, I have 16 interviews scheduled, and we'll put out the roster a little later today. And actually, now that I'm on the journalism side, I actually know stuff. So I'm gonna pass on this one. I don't want to comment on anything.
Sure. Great. Well, let's go, Sam. If there's any other thoughts you have for the week ahead, otherwise we can start on some of the news flow that's been happening over the last couple of weeks since we met last on Biotech Hangout. Sam, if you have any other comments on what you're looking for the next week, otherwise we'll start with kind of Pfizer's year-end comments and the Part D issue to kick off the
No,
news flow.
nothing for next week. I'm happy to kick off onto Pfizer. Yeah, so look, again, it's been a few weeks that we've had this. So one of the things that Pfizer did, which was quite nice, was to actually talking about IRA that Yaron talked about. This is the year that large pharma is going to get it squarely in the face with regards to the impact on the Part D redesign. Um, and they actually took the initiative to tell us how much is going to hit them. So they worked it out at about $1 billion net, 500 million boost, 1.5 billion drag. So that's a 1.6% hit to the top line. So that's from the Part D redesign. Now, all the other pharma companies are going to get hit too. But our expectation is actually not that but that most of them will not tell us how much. We've checked that with a couple of companies, and they've told us we don't think we're going to go to the same granularity as Pfizer did. So that's quite interesting, and that's we're going to have to figure it out. I'm pretty sure they can absorb it, but I'm interested to hear from the others whether they think this particular year and that impact is going to be affecting their I don't know, their M&A appetite. Certainly not licensing, because that's easier to do than meaningful M&A. Or is it actually going to change it for the positive? That'd be interesting, or not at all. I'll be keen to hear the thoughts here. And one last thing I wanted to say on that IRA type impact for the year is our Washington analyst thinks that actually the next list may be announced before President-elect Donald Trump is sworn into office on January 20th. So that could be an interesting list. 15 drugs to come. We think Ozempic from Novo Nordisk will be on it. Janumet from Merck, which of course not many people care about that much. And some of the cancer drugs, Xtandi from Pfizer, Astellas, and then Pomalyst. So it's going to be interesting whether they do rush that out. Well, rush that out, bring it out a bit earlier, just ahead of the swearing in of the president.
I have a
So this year is another IRA story. So
yeah, Sam. Let me ask
Yeah,
you about
Brad.
that. Since we're transitioning from one administration to the other, do we know how much of that process can be influenced either positively or negative by political appointees? I haven't really thought about that.
you mean the new incoming folks such as RFKs, etc.
Right. Like, everything in government is, civil servants kind of do the work, and then you have political appointees
Yeah,
at the
I
top
mean,
of it. And I'm just wondering, like, how much of the whole IRA, because the major headline
Because there is a process of selecting the drugs, right, Brad? I mean, like there is a choice that's made that needs to be brokered. So would the new administration might have different views on it versus the old?
Well,
Is
I
that
think
what
the
I'm hearing?
biggest headline, exactly, and also I think the biggest headline from the IRA last year was that the government didn't go as deep as it could have. That was like a choice that somebody made. And so I guess the question
mhm.
is, now that we have a new administration, can the leadership of the new administration for this round either choose to go deeper with cuts or not as much? Like how much of like who's making that choice, and is there any reason to expect variability from one administration to the other?
I'd love to hear what Yaron thinks of this, but I think from our perspective, it's very easy for President-elect Donald Trump to just roll with it. It would be it would just be optically odd to go against something that supposedly is good for the provision of healthcare in the US in terms of that particular aspect. Um, and I think by the time a lot of these folks are actually sworn in, etc., and or sworn in, become take charge, a lot of this would have happened already. What we are interested in is whether they can fix the other side of it, which is the small molecule period exemption period from 7 to 11. There is a bill, a bipartisan bill. We don't see a very high percentage of chance of it being passing this, but the next session could be. That is the sort of thing I think that they could focus on, saying, look, we leave the negotiation side alone, let that happen, but we're going to actually equalize the world as regards to small molecules and biologics. That's where I think there are sitting.
It'll be an important thing to watch for sure. Yeah, if we see any kind of
Yeah,
change in that,
one thing that I'm sure you've all noticed is
you're wrong.
the I don't want to call it mass, but it's beginning to feel like this is not a good cadence of exits out of the FDA at the senior positions. So that's something that we're following very, very closely because at the end of the day, there's the political appointees. Even Bob Temple is retiring. Um, the FDA commissioner and the head of CEDAR are leaving, and we think this is the beginning. So these are things that are very important, as we all know.
Yeah, and I mean, look, Patrizia was right. Was kind of supported by Janet Woodcock, who was kind of the steady leadership for a long time, along with Bob Temple and others. But again, and I think the jury's going to be out, right? I mean, if we were to be honest, I don't think that anybody would agree that there's not some inefficiency, some inconsistency, uncertainty that has always been present between hierarchy, policy positions, and the divisions. There's always been this battle between division and hierarchy in terms of their, policy and, platform presentations, and, what the FDA is trying to achieve versus what the divisions are willing to do, the lifetime civil servants that are really making the decisions. And so, I mean, there could be some positive aspects that come out of this for, drug development on the industry. So it'll be interesting to watch for sure. Let's move on to some other news. Yaron, you want to highlight Stoke had an announcement this week, Jasper as well. Maybe you can highlight those two
Yeah,
news
absolutely. I
items.
mean, I think that the one commonality on both of them has been the markets that we're in right now. So Stoke announced their phase 3 plans for their drug called um, sorafenib, which is an ASO for Dravet disorder of a patient with an SCN1A mutation. They've updated their data in December. This is their phase 2, showing a tremendous, 70%, 80% reduction in seizures and neurocognitive benefits. So now they've presented what the phase 3 is going to look like, which to many people, there were some concerns. Can they even move into phase 3 after a phase 1, 2, and let's say 70 or 80 patients? They got a breakthrough designation right before that. And so it looked like the phase 3 trial design was in line or better than expected. They were able to move into phase 3. The primary endpoint is actually going to be seizure reduction at 6 months. So everything looked good. And then the stock goes down fairly precipitously, presumably because they said, well, they're going to start the study mid-year. We all know it takes 4 to 6 months to start a study, so I think that should not have been new, but they're not going to have data until probably the end of 27. So, any company that then presumably will need to raise money gets penalized. Um, then you had Jasper releasing their phase 1/2 data with their c-Kit antibody. They're sort of a fast follower onto Celldex. Their drug called briquilimab. Celldex is barzolvolimab in phase 3 already. And the Beacon data, this was a small study still, multiple arms looking at dosing. And we all knew we're going to get the early doses. So there's still going to be higher doses. Efficacy already looks good, in line. The bottom line there is that they're not differentiated, which frankly we didn't think they're going to be. They're trading at a seventh of the market cap of the competitor. Um, so the data, because it's not differentiated and because they're a small cap and they need to raise money and they're about 18 months behind or so, well, that stock is down 60%. Even though the data I would say would look in line and they had the same sort of class side effects as well. So I think we're just in a tough market right now where companies are probably going to think twice. Do they really need to raise? Do they need to really release data if they have, unless they, obviously legally obligated to do so? They might as well wait.
Yeah, and it's interesting, and I don't know, my experience, going back when I was a public company CEO, is that, the stock movements are always more pronounced, whether it be on the upside or the downside, when J.P. Morgan news is released, and then they'll stabilize at some point. But it'll be interesting to see how, just stocks respond if there are news events through the week at JPM. Sometimes companies announce before they present formally at the conference. Sam, a couple news items from Novo. You want to cover
Yeah,
those?
sure. So obviously, the big news for Novo came just before Christmas, which was, I think, right on the hour before I put the turkey in the oven. Um, and that was CagriSema. So that's come out, and everybody knows the story. But then it followed a whole bunch of other downgrades, etc. People were beginning to worry: is Lilly competitive? Is it going to be able to? Sorry, is Novo going to stay competitive, etc. And this year is going to be quite interesting because we're going to see that data. I still have a little bit of a hope, very small amount, because I think what Nova's been saying along the way is that they're going to try and look to see whether they can push the dosing up on the CagriSema. But I was always wondering whether the whole point of something like this, of that combination of semaglutide and an amylin agonist, is to be able to maybe get a better, excuse me, weight loss, and not have the same sort of side effect profile, which of course was something that didn't quite work out. At the same time, amylin is supposed to be something that allows you to not lose as much muscle, but fat. Now, muscle's got a heavier, excuse me, weight than fat. So if you, is it possible that when we see the data, there's actually as much fat loss, but not as much muscle loss in these patients who were taking CagriSema? I don't know. We'll see. I don't even know whether we'll get that sort of data when it comes to it at ADA. But there's a whole host of other stuff that's going to come out this year that continues to be competitive against Novo, if you like, which is Lilly's GLP-1 pill or for Griplon. Um, Maybe Pfizer's pill. We'll see that. Both of them are supposed to come out at some point in the new year, possibly 1Q. And then, of course, you've got the other element that's quite interesting, and we've got to be keeping watching, which is the what happens with all those anti-myostatin drugs that people have been developing, things to try and help maintain that muscle mass. So Scholar Rock's data, Regeneron's data, and of course Eli Lilly's own bimagrumab sometime this year. So all of these things, I think, continues to highlight the risk for news flow risk for Novo Nordisk. I think the drugs are going to continue to sell, obviously, because it's a market that wants to own these things. And I've been having some emails from friends telling me after Christmas, Sam, do you think we should go on to Zepbound or Wegovy? Because I'll put on too much weight post Christmas. And I think that attitude will
Wow.
continue.
Yeah, just a fascinating market sector to watch, especially with the competition heating up. I'm sorry, Sam, did you mention the Valo Health
No,
deal?
so I mean that's a deal that Novo had before, and they've just expanded it beyond further. And it's quite interesting because I just wonder whether Novo is using this as their AI platform, essentially. Now, Velo did have a bit of bad news just before Christmas, so they could have. This was quite helpful to see, and that was a product that didn't work out. And my feeling is that this is a good way for Novo to have access to any AI capabilities, if that's the way you want to think about it, in the cardiometabolic space, off their balance sheet. So it'd be interesting to see how this pans out and whether they get anything meaningful out of it over the next. I mean, it's a pretty expansive deal. You know, 18, I think, assets potentially, and then of course the numbers get multiplied up. This is the milestone we can get for each, so therefore several $billion potential.
Yep. Uh, well, one of the bigger news items this past week was Galapagos, which we've talked about a lot on this forum. In that they, despite bringing in Paul Stoffel's well-known executive, it was part of the founding of the company. They still really couldn't buy any valuation above their cash position, and so it culminated in a split. Into two publicly traded companies, or it's what was announced. And Sam, do you want to describe that? And Brad, would love to hear your thoughts on, a little bit of a throwing in the towel. And I think with a creative structure that is interesting, might even be the best thing for Gilead to salvage something out of that partnership. But Sam, you want to describe this deal, and then would love to hear your and Brad and your own comments as well.
Sure, I'd love to hear everyone's comments on it. So basically, the company is splitting in two. One remains Galapagos with about $500 million in the bank, and all the CAR-T work that they've been amassing, the manufacturing and the assets they've got for lymphoma, or the trials they've got for lymphoma. And the other one's Spinco with about 2.5 billion euros. And that will have its own new management. And its job is to go and find assets to develop, which I thought was Galapagos in the first place. Gilead holds 25% of each. It seems to me that this is to get them out of the what they call the OLCA, which is the Option License and Collaboration Agreement, which was a 10-year deal they did with Gilead. And it suggests to me that previously, because of the structure of that deal and the opt-in that Gilead had, it became very difficult for them to do anything beyond phase one, which is where the option rights for Gilead were. So I'm assuming that's the case, because in the meantime, as this company with this enormous amount of cash has been looking for deals, things like Revolution Medicine have occurred. Remember, that was a reverse, right, into a highly cash positive company with nothing to do after the event. Verbio, which we'll talk about, Verbio did a deal from with Sanofi that has helped them gain a $500 million market cap in the past few days. You've had all these deals, new codes with Chinese companies. So why did none of this happen within the structure of Galapagos? Maybe that was the issue. Um, I'd love to hear what the others think, and we can talk about the CAR-T and the potential for Galapagos in general if we've got time or we're interested.
Yeah, I mean, one of the amazing things
Yep.
about Galapagos over the last, year or so after the Gilead stuff kind of blew up is it's always had this enormous multi-billion-dollar cash balance, and it's had the largest negative enterprise value in like all of biotech. And so it was only a matter of time, I think, before uh, you know, investors started to apply some pressure. So you saw, like, for example, I think Echo R1 took out a pretty big stake in them and, probably had some influence in this process and everything. And I really like Paul Stoffels. Like I've interviewed him in person at JPM last year, and have the highest respect for everything that he's accomplished in our industry. I mean, he's truly one of the most successful people in drug development uh, out there. I think that investors hated the CAR-T acquisition, and it's actually a really interesting story because it's so different. The idea there is rather than having central manufacturing like we have, like the kites of the world have like a couple big manufacturing centers across the country and in Europe and everything. The idea is to do kind of personalized manufacturing at hospitals and in cities. And so eventually it's going to require like a huge, literally national and global scale out if this comes to fruition one day. It's a totally different way of thinking about doing CAR-T. But I think because it's totally different, and also, CAR-T is just kind of out of favor right now in terms of startups. I think that investors were not wild that that was like the first major acquisition of that company, and that it's been the focus operationally of it since then. And so I'm not surprised to see a CAR-T version of this story going one way and a cash version going the other way.
And Chris, if I may add, I mean, look,
Yeah,
um,
please.
getting manufacturing away from central manufacturing to more disseminated manufacturing for CAR-Ts is obviously what we need to do. We can't keep forever waiting to have stuff sent over to a central manufacturer and then brought back. One of the things that it achieves, if the theory works out, is that you get essentially fresh cells. Fresh cells are better than frozen cells. I think we just have to assume that, just like in any other part of the world. You also have a manufacturing that's really fast, 7 day vein to vein. And I think that speed is probably going to be matched by pretty much most people in the next year or two. But putting all that together and then some ASH data that they presented, particularly mantle cell lymphoma, looked viable. I'm not going to be sitting here saying it's the best CAR-T company out there. But what's interesting is Gilead has its own CAR-T, Arcellx, and 25% of this one, right? So they're in a particularly nice place as far as they're concerned, I'm pretty sure, that they'll be able to cherry pick or combine these technologies or efforts or systems together at some point, if any of them show off, show good data sets. And if that manufacturing works, is perfect, plug it in. So we'll see. It is, but I still don't understand why the company needed to split to achieve this. I mean, why couldn't they just renegotiate the deal with Gilead to unshackle the cash balance essentially to go and get a whole bunch of other
Yeah,
assets?
yeah, I wonder if Brad's onto it, ECR1, like the influence of having a different focus strategy to use cash, to use the right amount of cash, right? Sometimes this blended approach and you don't get synergy, but antagonism in terms of some of the parts valuation. So again, sometimes these are just structure changes that don't have a real big impact, but sometimes there's always a hope that it will to be able to attract different investor bases. This happened when I was back at Celgene, and there was a lot of feeling that they should just stick with hemonc and not get into I, and some investors liked the diversity, some didn't, and that was a big debate back then. So I think this is always the case when you have a big pile of money and you're trying to figure out how to use it. You might attract different investors. Yaron, did you ever cover Galapagos? Any comments on this
My
deal?
my colleague Phil covers Galapagos, and we are involved as an advisor as a bank. So I would politely decline to
Got it.
comment.
Yep, sounds good. Um, Sam, you mentioned Veer, but is there anything more you wanted to add in terms of the vis-a-vis the Janix on PSA, or you want to just elaborate a little bit more on that?
No, I think that's fine. I think we can move on to the next topic.
Okay. Yeah, yeah, sure. What else do you have on your
Yeah,
list,
so there
Sam?
was the next list thing was the Verbiotech data, which was quite interesting. I'm watching Janix's share price, which is down about just over 30% from the peak that it was at after the excitement for the data that they present, which was very good in prostate cancer. So Verbiotech came out with their version of a masked T-cell engager. So the idea is that it's similar to Janix, but slightly different. That you have a T-cell engager, i.e., a bispecific antibody or fragment or whatever, that binds CD3 at one end and a target antigen relevant to your tumor at the other end. So what Janix did was to cover essentially one end of it, and that is the CD3, the T cell binding site. And what these guys have been doing, have been testing, which is an asset that they acquired, a technology they acquired from Sanofi, is blocking both ends, the CD3 binding and the antigen binding, such that when that antibody or that entity goes into the tumor, then the proteolytic activation allows the unmasking and then activation. So the data is early. I think the best I would put is that it seems definitely from a safety profile, it's competitive, it's better, lower CRS, etc. Efficacy, it doesn't look as good, but it's early days. It's there's still dose escalation going on. When you put the charts next to what Janix showed back in February last year, it looks about similar. Um, but these are very difficult comparisons to make on such small numbers. And I find it odd that the share price of Janix gets hammered so hard. And I don't find it odd that Verbiotech share price goes up because it was trading at close to cash. And they're here, they will have some positive data, which might get better over time. One of the things I want to highlight, and maybe I'm pretty sure Yaron will have a thought on this too, or in general, is that the dosing is significantly higher here. They're going with at the top end of the dose range was 1 milligram per kilogram. So on an average 80 kilogram patient, this is 70 or 80 milligrams per patient. Whereas Janix's was at 6, 8, 12, right? 12 is the top end that they tested. And the idea is that CD3 engagers are exquisitely active because all you need is a little bit of a tickle of that T cell to get things rolling. So I was sitting back, scratching my head, thinking, why is it such a high number? And one reason could be that don't forget that the antigen binding is also masked. So how is this antibody going to distribute within to the tumor versus anywhere else if it doesn't have specific binding until it gets into the tumor to the target? And that's the thing that I wonder whether that's why they need 1 milligram per kilogram or possibly going up to 2 milligrams per kilogram to push to get the equilibrium right so that they get enough antibody in there. And when you get to the higher end, are you going to have the same safety? Lots of questions, but nice to see another progress here on masked TCEs.
Yeah, but by the way, Sam, that was a great summary. It's possible the Genix is down because it's in the basket of potential takeouts, and I think you're beginning to see a lot of them, or have been trading off in the last few weeks, potentially due to unwinding of expectations into JPM. That might explain some of it.
Right. Okay. Well,
Sam, you want to highlight briefly any other news
do we
items
have any more
you
time?
have on
Oh,
your
yeah, we
list?
do a little bit of time. I think I might just
Yeah.
talk about unfortunate patient who died in Louisiana, having been highlighted by the CDC from bird flu H5N1 back in mid-December, late December, and folks generally ignored it. And then the individual unfortunately passed away. with comorbidities, etc. And what is more relevant, perhaps, is and the share price reaction of the companies that then followed: CureVac, Novavax, Moderna, Biotech. They were all up on the back of this, and of course the news that there's a big flu issue going on, and I'm sitting here with the back end of a respiratory infection, of course, um, and those share prices got all excited. The problem is in that individual, or not the problem, thankfully, in that individual, the frequency of H5N1 virus that had any kind of mutation that would allow it to transmit from human to human was very, very low. And there's been no evidence of human to human transmission. Once that happens, God forbid, that is when I think that's the time that comes to think about these companies as a possible pandemic stockpile help. But there's
Yep.
already a pandemic stockpiles out there from Sanofi, CSL, and GSK. The first one having been approved back in 2007. So those share prices went all the way up, and the next day went all the way down. And we're here sitting, fingers crossed that we never see human to human transmission from this H5N1 virus.
Yep. All right, thanks for that. And I just want to highlight the news that I mentioned at the top of the hour, that the Lilly A16Z deal. It just brings in to the question around, Lilly's cash position, and you could argue Novo as well, and how they might be doing some things differently in the industry, and how they use that. But really, there's been a lot of pharma companies doing external innovation and trying to find early stage. This is a bigger play to work with an outside venture firm, and Pfizer had a collaboration with Flagship. It's not the first of its kind, but probably the biggest and most notable. And how Lilly and maybe other pharma companies might follow that type of model to work with a firm that's just focused on finding the best investment opportunities. So I know Bruce Booth couldn't be on this. He highlighted this as an interesting development. So maybe it's a topic for a future biotech hangout. But just look, we know everybody's busy, maybe traveling, maybe waiting for news flow and events. Brad, we all look forward to your plans for the week and who you're going to interview. I have really it's been an honor to be part of Biotech TV with BioVenture Voices. We've interviewed Alexis Borisy, and that'll drop on Monday for people who have extra free time over this next week to hear his perspective as a serial entrepreneur, investor in biotech. But a lot of exciting stuff we expect over the next week. Hope you've enjoyed these insights. Any final comments, Brad, Yaron, Sam, for the audience?
Yeah, I would just point out, in case people haven't seen our tweets and LinkedIn posts, every Tuesday of JPM, it's an annual tradition. We have what we used to call the tweet up, and now we call the hangout. So it's social event that's open to everybody and anybody. We have a lot of generous sponsors who are supporting it. So we'll have, all of the drinks are free, and we'll have some food and everything. So it's the Tuesday of JPM at Persona, which is just like a block away from Union Square. So it's easy to walk over, and would love to see everybody there. And there's a RSVP. You can just kind of show up, but there's an RSVP link.
Brad, I have a formal statement I was
Oh,
provided. Let me just read that for everybody. Biotech Hangout will once again be hosting our in-person networking event at JPM on Tuesday, January 14th from 7 to 10 p.m. at Persona, which is the same location as the past 2 years. We hope to see everyone there for a fun night and open bar. Importantly, thanks to our sponsors, Johnson & Johnson, Ms. Pro, FTI Consulting, PureTech Health, and Catalytic Agency. Be sure to RSVP, and they will share a registration link in the feed again in case you missed it. So I won't be there, but Brad, you'll see Brad, Daphne, and many other of the hosts of Biotech Hangout. We'll look for you to tune in on the post JPM Biotech Hangout next week.